Hi, fellow traders. I hope you guys had a great day today. We had a really good day. I I honestly didn't know how good of a day I had until I started doing my reflection and took a look at my P&L, and it really blew my mind. Today felt kind of like yesterday. It was a little slow and steady. That's the way I like it. I love it when my days are slow and steady because it's less stress, and at the end of the day, I feel refreshed. I don't feel beat up or stressed out or anything like that. But today was a really, really good day. And we'll take a look at that in a minute. But I want to thank you guys that hung out with us yesterday on our live stream. You got to see the class. And this morning, we kind of finished it up. You got to see how I scan, how I go through and pick the stocks that I trade, and you got to actually see me take a trade on one of those stocks and trading the strategies that I teach and I use every day. And this wasn't just a one time thing, this is what I do every day in chat. I stream my platform live, real time, so you guys can see me go in and out of trades. You can ask questions. You can hear what I'm thinking. Sometimes it may be incoherent because that's just the way my brain is. I got dyslexia, so sometimes I may not even understand what I'm saying. But you get to see it as it happens, and you get to see that you can actually make money day trading. You can actually grow your small account. You don't have to guess and wonder if it can be done. You see it happen first hand every day. So you guys that hung out, you got to learn, you got to see. Thank you. If you didn't get to see it, it's on YouTube. Uh, it's the live streams from yesterday and this morning. So go check them out when you get a chance. So as a day trader, we must constantly evaluate and adjust our strategies. What worked last quarter may not work next quarter. And all of this has been brought about by how technology has evolved and continues to evolve in our industry. A couple years ago, things didn't change as fast. Now, things change relatively quickly. And we have to stay on top of it. And I'm not saying we change strategies, I'm not saying we abandon the strategies that we have. There's only a handful of strategies that traders use, and they're the same thing. It's just a rinse and repeat. Some strategies work better in some markets than others. It's just a matter of developing your strategy, understanding which works better in which market, and be consistent in trading those strategies. Yeah, you have to make tweaks here and there. And if you started out with me back in 2014 and you read my blogs back then, and then you start watching my videos when I started doing them in 2015, you can see I still trade the same strategies, the same core strategies. It's just that some of the levels are different, but it's the same strategy. Back then, VWAP was king. Now, VWAP ain't crap. It's still a an indicator. It's still, you still kind of respect it a little bit, but it's nothing like it was a couple of years ago. And you see every day, I point out to you every day as it's happening, stocks just trade through VWAP above and below it like it's not even there. The only time you see it kind of react is when the 20 or the 9 is sitting right there with it. There has to be something else with it for the most part. I'm not talking about 100% of the time. I'm talking about 70, 75% of the time. And that's the percentages that we trade on. So you'll know through, and back then I was trading a 15-minute opening range and it was working like a charm. Now, 5. And sometimes 5 doesn't work. You got to go to 3. I may be, in 6 months, I may be doing 3-minute opening range exclusively. And 5 may be a distant memory. You don't know. Those are just the subtle changes that we have to make to stay ahead of the game. Because these funds and investment bankers and all of the people with the big money, the institutional guys, they make money when we lose money. Somebody has to be on the losing end for them to make money. So as a day trader, we have to figure out what they're doing and ride their coattails. If we're doing the opposite of what they're doing, we're not going to make money. So we need to figure out, what are they using? What indicators are they using? What's making what's making the market move? Now, we'll never know for sure, and we'll never be 100% perfect in figuring it out. But once we do, we just keep on pushing it. It's just like with the earning strategy, the aftermarket earning strategy. I'm not right every time, but I'm right probably 7-8 times out of 10. And if I'm right 7-8 times out of 10, I'm going to make a ton of money. But for some reason, too many people focus on the one day. I could be good 3-4 days, and then the one day I'm wrong. You see, something's wrong. The strategy's not working. That mindset, you'll never be a profitable trader. You'll never amount to anything in trading. You can't have that mindset. So we're trying to change that mindset as well. But there will be a time, and there are periods of time in the market where the strategy is not accurate enough. And that's when I tell you I'm not trading it. We're going to stop it. Because I know, based on experience, it's not going to work right now. And that's the way we have to be with our strategy. So we have to constantly evaluate and make these minor adjustments, not major adjustments, minor adjustments. That's how we remain consistently profitable. And that's what you see me do, over a period of time. Those of you that's been with me long enough, you have experienced it and you've seen it. So just want you to keep that in mind. All right, so today, this is exactly the strategy, the day that I like to have. Just like yesterday, lock in on one stop and maximize the move. And here we had a opening range breakdown. Here's a 5-minute opening range. Okay, it's sitting right on the 50. So there's no trades. For me, if it's sitting on a moving average, I can't trade it like an opening range breakdown. I have to wait for it to lose that moving average. And you see, here's a 5-minute opening range low. Normally, we would trade this as soon as it breaks through, we would jump in. That's the normal thing. So if we're looking at the open here, we've got let's see, first candle, second candle, third candle, fourth candle, and this is the fourth candle is the first one that closed below this level, below the 50. And then when this candle opened, it pushed up a little bit and it started to sell. I was all over it. This is still an opening range breakdown. We're still within the first 30 minutes, but I had to wait a tick. This is one of these that, had a special circumstance that once this printed, it changed the entry strategy a little bit. So we had to wait. Once we got in, first target, second target was the the 100 down here, and you leave a little bit on just to see if we can fade it. But we couldn't, came back, stopped us out at break even. Then what do? We wait for the setup to happen again, and then we re-engage. We bounced, we tested all of this resistance. It tried, it beat on it. Once this popped up to the 20, it came back. It could not close above any of these moving averages. Next candle open, once we broke the low, it's time to get in. And I waited for it to break the low of this. And that's what I jumped in. I could have gotten in a little bit earlier, but I was being a little bit more conservative. I waited till it broke the low of this. We jumped in. I honestly kind of spooked myself a little bit. I took some off a little bit early. You can see right here, 211.75. I could have waited a little bit longer and waited to the 100, but I didn't. I kind of let myself get a little antsy here, but it's still a decent cover. I mean, you can see I got in at 212, took some off at 211.73. So just a point, not bad. And then we come down and I take some at the at the 100. I really didn't need to do this. But again, I was upset a little bit with myself for not waiting. And then this just kind of beat around here. So I ended up taking some here. And then I let it fall through. Took another piece off here. And I was waiting for the 200, I'm sorry, to see if this little piece would get down. It bounced, came back. I could have still held on to this piece, but this is like a profit stop. I was like, look, if it gets up here, we may be pushing. I could always get back in, which is exactly what I did. So it sold. We ended up getting out here. And as we came back, we jumped in, and it did bounce a little bit, but ended up taking some off halfway, covered some at the 200. That was the final target, but I still left a piece on, 50 shares to see if we would get the rest, but we didn't. And I could have taken this off earlier, but I just let it ride to see if we were going to come back potentially, but we didn't. But through all of that, only traded 200 shares, and we made $771, almost $800 trading 200 shares. I know that's all I could trade because it's a $200 stock. But if I could have traded 300 shares on this would have been great. If this was Thursday of last week, I would have had enough buying power because I still had my money in. I hadn't wired out yet. And I could have traded this with 300 shares, maybe 400 shares, and done pretty good with this. But you can see with small share size what you can do. And we're in account growing mode. That's what we're doing. We're not trying to make a living yet. When you're growing your account, you're not trying to make a living off day trading. You're trying to grow your account and get enough money in the bank so that you can open a good broker, a traditional broker, and then get to work. And that's when things start to work for you. So, not bad. Not a bad day at all. And if you could compare today with yesterday, here's yesterday. Now, I had a lot more tickets, but again, I only traded 200 shares. 200 shares of this stock each time. And we ended up with 347.53. Now, this stock, it was a little bit cheaper stock. It just didn't move as much. But we were able to kind of maximize the efficiency of this. I got stopped out twice on it. And that's another thing that kind of cut into these profits. So technically, we could have had a $500 or $600 day if I eliminated the stop outs, but you can't. This is all part of trading. So some days you're gonna have really good days like today. Some days it's gonna be okay days. You're gonna have decent days. But the key is being consistent and doing the same thing every day. Not trading outside of yourself, sticking to the plan and letting it go. And you guys see that's in the community. Whenever I get outside of myself, whenever I start to do something beyond what I need to be doing, that's when things get out of sorts. So you stick to what you know, stick to what's comfortable, and you will grow. You grow. It's a process. Again, it's a process. You just can't jump out and keep challenging yourself every day, every day, every day. It doesn't work that way. You have to develop. There's skills that you have to develop. There's a mindset that you're going to have to develop that is going to take time to do. All right, so that's going to do it. That wraps it up. Again, if you missed the live stream, all of these trades but the last one on PANW, it was streamed live. It is recorded. You can go back and take a look at it, and you'll be able to see this scanning procedure, how I find these stocks, and how I determine which ones I'm going to trade, and then how I execute my trade plan in the market. All right, guys, so have a good night. Enjoy, stay safe, and I will see you guys in the morning.